China has been the driver of growth for the past several years for the global economy, but it seems this year that China will also be slowing down. Will it be a hard landing or a soft one? To talk a little bit about that, I am joined by Dr. Zhu, Professor of Economics and Finance at CEIBS, that's the China European International Business School. Dr. Zhu, thank you very much for your time.
Thank you.
We had the number come in for last year at about, I think, 9.1% for China.
Something like 9.1, 9.2, yeah.
Substantially down from the over 10% in 2010, but still higher than most people had anticipated in a year when China was decidedly slowing down.
Right.
What do you make of the growth outlook in China at this point in time? Is it going to be a hard landing, or do you think it's going to be a soft landing?
I think more likely it will be a soft landing. In a sense, it won't collapse or a sharp drop in GDP growth, but of course I have to assume those numbers are reliable, and
you don't believe they are? Do you think that they're actually overstated or understated?
Sometimes overstated, sometimes
this time overstated or understated?
Understated. This time maybe a little bit overstated. Maybe
so you think China grew at a slower than 9% rate potentially?
Could be the case.
Could be the case.
Okay. But of course, I don't have data to support my view. One thing is the external demand weakened significantly. After the European debt crisis and the global financial crisis, the export has been, if not the strongest, but a very strong growth driver for the Chinese economy. So when the external demand weakened, it hurt the Chinese economy. So that's one thing. And secondly, even more important is the investment growth. Slowed down quite a bit in the second half of last year, and will continue the trend in the first half of this year. So we expect the quote unquote, the true GDP growth could be below 8% or something. But still one of the highest.
Below 8%?
Yes.
Is that what you said?
Yes,
wow.
yes. But whether or not the government allows the number to drop below 8% is something nobody can predict.
Well, right now it's 9%. So we've got to live with what we have, even if all the other indicators are telling you that growth is in fact come in far slower.
Yes.
Why do you say then this is a soft landing? Because if China's gone from 10% to 8% in a year or a year and a half, isn't that a hard landing?
Well, by numbers, maybe you can call it a hard landing, but nothing like the European debt crisis or the global financial crisis. Nothing like that.
China's balance sheet is very different from what...
Very strong balance sheet. So that's why I said that maybe it's a soft landing. Well, meaning no dramatic, unexpected disaster to happen in China. So that's what I mean by a soft landing.
The last I checked, the inflation rate had also come in close to the targeted rate, about 4%. What do you expect the monetary response to be to this GDP number, to the prevailing inflation situation in China? Because I think over the last several weeks, the expectations have built up for certain kinds of monetary easing.
Monetary easing,
yes.
No. I don't think any large-scale monetary easing we will see this year, because inflation is still a threat to the stability of the economy. Again, the official number is, what is the official number? 5 point something %, right? But my sense about inflation, CPI inflation in China is more than the official number indicates.
So what do you assess CPI to be?
Well, I don't have statistics, so it is very hard.
But roughly, indicatively, intuitively, where do you expect
intuitively, in last year, it could have been double-digit. Last year.
But that's astonishing, because the picture you're painting of China is a stark contrast to what the world is looking at China. So you're saying GDP growth rate could possibly be lower than 8%, that inflation was a double digit?
No, not for last year. This year could be lower than 8%.
Okay. But the 9% figure that came in for 2011, you said could be an overstatement?
Could be an overstatement. Yes, it's
All right, so growth
it's
at
hard to tell.
9%, growth at 9%, inflation
Okay.
in double-digit figures.
No. I'm not saying an all-year average CPI is double-digit for a few months.
For a few months, okay.
Yeah, for a few months. Yeah, could be a
So you don't
double-digit.
expect any kind of monetary easing, at least in the short term?
No, not in the short term. Once you have monetary easing, inflation could come back pretty soon. So I think that's a too high a risk for the monetary authority to take. So no substantial monetary easing this year, and the GDP growth will continue to slow down.
So much of the world's global commodity forecast is based on how China will do, how China will fare. The energy forecast is again based on how China will do and how China will fare. What do you see as some of the key challenges facing China this year if you expect growth to come in at below 8%?
Well, I think the biggest challenge to China this year is not the GDP growth. It's not the control of inflation, but economic reforms. Economic reforms. Okay, why I'm kind of pessimistic on China's investment growth? Yeah, that has been the single most important driver of the Chinese economy, because in the last decade, almost every year, okay, investment growth double the rate of GDP growth, almost double. So as a result, so much overcapacity in manufacturing industries, and even the monetary authority do some monetary easing this year, and the businesses and companies can hardly find profitable investment opportunities. Okay. So the constraint on the Chinese economy, on the future growth of the economy, is not really the availability of money or availability of commercial loans, but availability of profitable investment opportunities. Okay, that's why the number one concern I have over the Chinese economy. So in order to create more investment opportunities, we need to do deregulation, not regulation, opening up the state monopolies to private sector investment and create more jobs and investment opportunities. So really the economic reform, the growth potential of the Chinese economy has not been exhausted. We are not like United States or Europe, mature economy.
Of course not.
Yeah, and the GDP, per capita GDP, 40,000, 50,000 US dollars a year. Okay, we are still mid or low mid-income country. A lot of unmet demand in there. Okay, what you need to do is to unleash that unmet demand, unsatisfied demand. So to do that, we need to continue the policy of Mr. Deng Xiaoping, reform, deregulate. So monetary policy, fiscal policy, I don't pay much attention to those. The key for China to maintain the growth momentum is reform.
It is a politically important year for China as well, if I remember correctly. There is the leadership election that is to take place within the party. I'm just curious to understand, what is the willingness you see within the government to be able to achieve several of the things that you laid out and create this structural shift from an economy that's been outward looking and externalized, but in the face of a slowing world, now needs to be more inward looking, clean up, reform, and create more domestic demand?
The political willingness?
Yes.
It's like a thin air.
But isn't that what Chinese government needs to do to be able to sustain the growth?
Definitely. Yeah,
and
that's
you don't
what we
see
need
any
to
willingness to do that?
Some willingness, but not very strong. Not very strong. In an election year, well, next year will be the change of the government. So before the change of government, the officials, they are very cautious about any possible mistakes they make that could endanger their position in the next government. So the mentality in China now is like let's wait to see what's going to happen to the economy. Then we decide what to do. So they are overly, cautious.
In that case, would you say this year will bring in less than 8% growth according to you, and next year it could be probably even lower?
It depends. It depends. Okay. If the growth rate, the true growth rate, is below 8% or even maybe below 7%, right? And you will see some problems emerge, right, in the economy. And then, I guess it is always the case, okay, little crisis is needed to push forward.
To push the government, yes.
Yeah, to initiate necessary reforms. Yeah, if everything is fine, there's no incentive, right?
Yes, absolutely.
There's no pressure. This is the very nature of politicians.
It's exactly how it works in India as well.
In India, in China, everywhere. Yeah, in United States. If you talk about the restructuring and reforms in the States, no. The Democrats and the opposition party, they all Republicans, they all focus on next year's election. The policy reforms, the structural reforms, not very high priority on their agenda. So it's all over the world, the same. Only when you have debt crisis in Europe, right? And people have to think, okay, fiscal austerity is necessary, otherwise our country will go bust. So
you're expecting a slightly gloomier picture of China than most people outside believe will be the case. Than the mainstream. I'm told you always have a contrarian view, so you've clearly lived up to that. One final question.
Yeah?
You're here at the World Economic Forum annual meeting. You're interacting with economists, business leaders from across the world.
Yes.
What do you make of the steps politicians in Europe are taking or not taking to be able to resolve this crisis? Because the US seems to be on the mend, slowly but on the mend.
Yes.
Europe seems to be the big shadow cloud hanging over our heads this year.
Yes.
Do you believe it will get worse before it gets better?
I think it will get worse before it gets better.
All the way down to a potential default, or maybe
defaults.
2 or 3 sovereign defaults?
Yes. Yeah. I expect to see a few defaults in Europe, in particular in Southern Europe. And also that will drag down the commercial banks in those regions, because commercial banks hold so much government securities. But in some sense, that's good for Europe. Okay, that gives Europe a sense, a much stronger sense of crisis, and I think Europe really needs to reflect on their policies in the past. Big spending, big government is not sustainable. It's not sustainable. Your welfare spending, you have to put your spending on the revenue side. Okay, if you don't have that much money, no matter how wonderful the promises the politicians make, in this world, there's no such a thing like free lunch.
Yes.
No, you cannot accumulate government debt over and over again and forever go. No, there is a limit. There is a limit. And we have to realize that very simple truth. No free lunch. It's time now to pay back what you have overdone in the past. And it is painful. But without this painful restructuring of the public finance, Europe cannot sustain the recovery, cannot even see the recovery of the economy from the global financial crisis. So what is lacking in Europe, okay, I think is the leadership, the vision. And Europe definitely needs the leaders with a vision, okay? If we want to save the euro, we have to go from monetary union to a fiscal union. Okay, without a fiscal union, euro cannot be saved.
Yes.
And from fiscal union, eventually to political union. So you need a forward-looking leaders with the political courage, the courage to tell European people what we need to do, not just the promise of a wonderful future, but let's deal with the painful reality now.
That's an ambitious program for a group of nations that are, many of them are going to elections this year, so it's going to be a year dominated by politics and not sound economics. But thank you so much for your time, Dr.
All right, thank you.
It's a pleasure
for
speaking with
inviting
you.
me.
Thank you.